Morning, everyone. It is 6 a.m., half an hour before the market's going to open on Monday, June 3rd. Friday, we had some really interesting market action where institutions finally came in the last 30 minutes, 40 minutes or so of the market and just really bid this market up. And that was probably not what most people were expecting. It was quiet all week. We were waiting for institutions to come back, and we would have expected them to come back on Thursday, but they waited all the way until month end and the last really 30 or so, 40 or so minutes before really bidding this market up. Now, what we need to know is what sectors we've had this divergence between the QQQ and the S&P, or sorry, not the S&P, the Dow Jones for quite some time, where the QQQ had made new highs and pulled back to its EMA 20, and then on Friday, even lower, almost to the MA 50 before it was bid all the way back up to the EMA 20. The Dow Jones has been lagging behind and it just barely matched the highs from before, and it got sold off all the way to its MA 150, and then on Friday bid up to its MA 50. So it's sitting right at resistance. The QQQ is a little bit above the EMA 20, so it has already cleared its resistance, but the Dow Jones is sitting right there at resistance. And we can see that this morning in pre-market, the Dow Jones is having a little bit of trouble. It's doesn't, at least at the very beginning, as of just before the market opens, it doesn't have the momentum to carry it above this collection of moving averages right here. If we look at the QQQ, in the morning, it's already up. So we're already heading up towards our EMA 8, or may have even cleared it by the time we open. We may actually open above the EMA 8. So it looks like the QQQ is still exhibiting relative strength above the Dow Jones, over the Dow Jones. How long can this last? How long can we have this divergence in the Dow Jones and the QQQ? And at what point do we start seeing money start going into the blue chip type of stocks? So these are important questions that we want to answer because that will help us allocate our capital. Right now, when we went over the weekly market review, we said that we wanted to get more neutral. The S&P 500 came and bounced, came close to the MA 50, and looked like it was going to head higher, but we are uncertain that it could clear this area of consolidation that we've been going through over the past 2 to 3 weeks. And for that reason, we wanted to get our portfolios neutral. Now, that's not to say that any shorts that we have in our portfolios are necessarily bad to hold on to. It's just that from an overall portfolio management perspective, we just want to get our portfolios neutral. So, for example, one of the ones that we have is AFRM. And AFRM, what happened on Friday? It was still down 0.31% on a day where the S&P 500 had this screaming recovery and ended up almost 1%. AFRM AFRM was still down 0.31%. That is a very weak relative strength stock. So technically, we would wait and hold on to AFRM and we'll follow it downwards because we would expect this to continue its momentum to the downside. There's nothing about the stock itself that shows us that it should be turning around right now. But because of the positioning in the market, we just want to get our portfolio neutral. So I just want to point that out, that your shorts we're not getting rid of shorts because they're bad or they're not good shorts or that they can't make us more money. It's just that from a portfolio perspective, we need to be taking risk off the table right now. So S&P 500 is telling us, hey, we're not so sure. We're hitting this area of consolidation. It may be a fairly larger area of consolidation than what was in the past 2 to 3 weeks, but we're still in this area of consolidation. And instead of leading short, now that we've come pretty close to that MA50, and in the weekly market review, we showed how many of the forces that we used to identify that the market was weakening, those are now gone. So this was it. This was the baby pullback that we were anticipating. And we were talking about all last week, hey, we're going to come down to the MA50, and then we'll need to decide. Then we'll need to see if there's good potential for us to continue to move down, or if we see higher probabilities in it moving up. And we came to the MA50, and the market is very clearly showing us that the probability is that we'll move higher, or at the very least get caught up in this area of consolidation again. It's just the probability of us moving lower and breaking below that MA50 has decreased significantly. And that's why we're making the adjustments. So what we want to look at is VIX, bonds, then we're going to look at earnings, and then our economic calendar. So VIX was one of the forces that neutralized. Right? We came to this area that is normal for 2024 so far, and we're sitting right there. So there's nothing telling us that, hey, we should move higher or we should move lower. If we break this horizontal level that we were looking for, we said on Friday that if we broke this horizontal level, then we'll be going higher. And if we broke this horizontal level, then we'll be going lower in the S&P 500. Right now, we're sitting below both of those levels. And if we reach back up and go above that 1375 level, then we're going to look for maybe this market starting to pull back or at least consolidate. Right now, that's not the case. The VIX is just a tiny, tiny bit higher on the morning. If we look at TLT, when we saw this come down here, we said, okay, that was a really big move really fast. We should close our short positions in the puts for TLT. The next day we popped up, we said, okay, well, we definitely need to close our shorts in TLT. And then we popped up even more on Friday. This looks like it might continue. It's not guaranteed, but it looks like it might continue to the top of the channel. I thought we extended these things. Okay, so we might continue to the top of that channel. And that's irrational. It does not fit in with the story and the dialogue that Fed has given us, the economic picture, any of the data that we've been given. And our FedWatch tool, we've been talking about, I don't even know for how long now, how this needs to collapse down to zero. And it went up instead of went down. Right. Went up over the past week instead of going down. So we really do need to see this TLT come back down. But given the way that the market is behaving, it's more likely that it will reach the top of this channel before it starts to move downwards. So we could say, hey, maybe it's going to move down from here, but I think it's a little early. And if we do see it moving down, then we might take a position. But if not, I'm going to wait until we hit the top of the channel, and then we can take a position shorting the TLT once again. The earnings. So what kind of earnings do we have this week? We're already sorted by market cap. So it looks like CrowdStrike is the larger market cap stock that is reporting this week. We've also got Dollar Tree. So we're still looking at retail and consumer spending. So Dollar Tree will give us a better picture of how that is developing. Campbell's Soup, a nice consumer staples, that will also show us whether consumer behavior is shifting in the grocery space. Same with SJM, JM Smucker. And that's about it. We do have Five Below. That's a similar stock to Dollar Tree. And we have Vail. We're not going to expect them to do very well. They generally do well in the winter because they're more known for mountain skiing, snowboarding. So that's about it. This is, well, let's go one more page down to about $1 billion market cap is usually where I stop looking. But I don't see a discount store that I've never heard of. I don't know that this would be well followed or be given a lot of attention. Yeah, that's about it. So we do have a few pretty important ones. So we'll want to watch how those develop. Let's take a look at when they are reporting. We got CrowdStrike tomorrow after market. Dollar Tree Wednesday before market. So both of these will be paying attention to this session, tomorrow's session, and Wednesday's session. Tomorrow to see how we are reacting going into earnings, and then Wednesday to see how the earnings report actually comes out. Campbell's Soup, June 5th before market. So once again on Tuesday, SJ Smuckers, June 6th before market. So this one will be Wednesday. And then we've got DocuSign. That'll be pretty important. This is the Thursday, Wednesday after market, and Five Below. So tomorrow is going to be pretty important. And then Wednesday will be the next most important. But tomorrow will give us a lot of data to work with, and we should get a pretty good idea of how the rest of the week is going to go. So we'll be sure to remember to take a look at that tomorrow. Well, we didn't even look at futures. So let's see how futures already. We can see that there's divergence between the NASDAQ and the Dow Jones once again. We've got the NASDAQ up about half a percentage point. And then we've got a little over half. And then we've got Dow Jones down, well, basically flat. So there is divergence there, non-random in NASDAQ, and just completely flat in the Dow Jones. And then we've got the S&P 500 random at about 20 basis points. So it looks like there is still attention on the NASDAQ. And for now, maybe the institutions are still taking a careful look at tech type stocks, or maybe more specifically SMH or chip stocks. NVIDIA might still be having an effect. We'll take a quick look at that. But divergence within the sector cannot. Whoa, sorry. You can search for it in the App Store. So the divergence within the tech sector cannot continue for too long either. But for now, it does look like it is in play. So got SMH at the very top here. This is on a longer term basis. Communications, a few sectors down, and then we've got overall tech way down here. So let's take a look at in the last week though. Communications towards the top. Tech at the very, very bottom. And then where's my SMH? Oops. There it is, kind of in the middle. Yeah, that's an interesting divergence, especially since SMH, which had been leading, is now down. Let's take a look at all three of those. SMH hit a peak on Tuesday and came down to its EMA 8, actually all the way down to its EMA 20, and then traded back up to its EMA H. This is looking strong. This is looking very strong. This looks like institutional money might continue to move into the semiconductor space. Let's look at specifically NVIDIA. NVIDIA also very, very strong. It gapped up on earnings, continued to move higher, gapped up again. And then after that gap, it's been chopping sideways. So this is still looking very strong. Not necessarily that it's going to make another new high anytime soon. What is most likely going to happen is that it's going to consolidate here. And then given its momentum and the continued interest in AI and the semiconductor space, what we just saw was that there's strength in the semiconductor space still. It will probably, after its period of consolidation, continue to move higher. When do we enter? Not anytime soon. Well, I can't really say about the timing, but not right now is what I should say. Not right now. The, I don't know, what's this S? Oh, split. Yeah, the split coming up. So most likely we're going to consolidate until the split, and the split will make it much more affordable for retail traders. So we're at the 1,100 right now. It'll split to $113. That makes it far more accessible for retail traders. So that's probably when we're going to get a run up. There's going to be a lot of interest in NVIDIA once it becomes more affordable. So that might be one to watch if something like that is interesting to you. Right, it seems like it might be a little expensive to me. So generally, I don't watch those things too carefully, but there is a lot of interest in NVIDIA right now. So that could be a good trade just before or just after the split. So it looks like SMH is going to continue to do well. It's a good space to be in. And then XLC is also looking very strong. This is a 1% move, so it came down, hit its EMA 20 and bounced right up. We want to see it break this high right here. I don't know if that's nope, not the all-time high. So we want to see it break this level right here. Looks like pre-market, it's pretty close to it. If it can break above and confirm, then XLC really it could potentially match its high up here. And let's see if that's the all-time high. All-time high was September 1st, 2021. Yeah. So it's that is all-time high. So if it can break above this high right here, it's pretty likely to go up and challenge that on high. So XLC is looking very interesting as well. And then overall tech hit an all-time high very recently, May 23rd, so about a week and a half ago. Not looking as strong as the other two. This looks very similar to the S&P 500, actually, a little bit weaker than the S&P 500. So it looks like the focus really is still on the semiconductor space, and communications might be the other part of technology that is might more quietly, like more under the radar, get some really significant gains or some investment by institutions. So actually, I'd be interested in both, in finding some interesting trades in both of those sectors. But you don't want to get too concentrated because both of those are still tech. And if anything happens in the overall tech sector, it will drag down both of those. So you'd have to allocate your money carefully and just know that they're going in, it's going into basically the same bucket. And you seek to offset it and either diversify it if you have a really large portfolio, or you would definitely want to offset it with shorts in weaker sectors. Okay. So this gives us a pretty good picture. We'll have a better idea of how the rest of the week will go after how we trade today. And after the earnings tomorrow, we didn't even look at the economic data. Let's do that real fast. Today we got PMI and the ISM manufacturing index. That'll be pretty significant. Then JOLTS reports and factory orders. They've got it marked green here, but that could have a reasonable impact on the markets. And then we've got PMI and ISM services. I don't know why these are all marked green. This week, these should be red. They should have a decent effect on the markets. And then we've got international trade in goods and services and jobless claims. These should be marked green in my opinion. They'll be less important than these up here, especially since it's coming later in the week. And then the employment situation will be very important. It comes out once a month, and it is always highly followed by the markets. We'll get a much better idea of how the week might go tomorrow. So we'll look forward to that data. For now, we'll just see how this comes out and trade accordingly. So we'll leave it there. Have a wonderful day, and I will see you in the post-market session.